As Bitcoin's mining difficulty skyrockets, reaching unprecedented levels alongside its price surge, whispers of a looming crash emerge. Analysts speculate that miners may trigger a correction before the halving, with the MVRV pricing bands indicator hinting at potential deep at around 61,700. Don't forget to subscribe, like, and share, and let's start. And we're starting off with, if you sell your Bitcoin to BlackRock, you probably won't be getting it back. Bitcoin spot ETF average inflow extrapolated, as here we could see the total spot ETF flows in Bitcoin as daily new Bitcoin supply mined. And here we could see how the BlackRock definitely getting more and more and more, and how in just 1 year they will be holding 1.2 million Bitcoins when only less than 250 million will be mined in this whole year. So that's what I'm saying, you just need to prepare because it's kinda sad. BlackRock just broke their Bitcoin ETF volume record again with $3.8 billion just today, just in 1 day, imagine that. It is now more important than ever and less risk than ever for people who can afford to get one Bitcoin. Get to one Bitcoin, and for everyone else to get as much as you can so you don't regret looking back on these years. Next up, looks like Bitcoin is dead. Damn, that was fun. The markets know something, the black swan is inevitable, better sell all my assets and build a bunker. Next up, Bitcoin halving cattle. Bitcoin halving cattle Fibonacci spiral, and here we could possibly see how it been from 2009 when we were definitely mining 50 Bitcoin per just one block, and here we could see how it continues to spiral with 2015, 2012, then we go for 2016, 2020, 2024, and it will continue on going on. Even less and less Bitcoins will be mined starting from 2032, when it will be only less than a Bitcoin per block, and ending by 2140, so 2140, which will be just zero Bitcoin, and by around 2056 we will mine less than 0.01 Bitcoin per just one block. The next one we go for is Bitcoin ETFs are going to unintentionally break the global financial system. ETFs are managed funds that hold Bitcoin. ETFs are making Bitcoin easily accessible to everyone with a brokerage account. Easier access, rising interest in the asset. Here's how I think things will play out. So of course this may not happen, it's just an educated guess based on an understanding of how fiat works and how Bitcoin works. So nobody is an expert, so I could be wrong. As an interest in Bitcoin grows, is the prices redistributing wealth from legacy assets to the Bitcoin holders. The people who own Bitcoin pre-ETF are now getting wealthier and can spend the wealth they accumulated by being early. This is going to increase demand for goods, meaning inflation will get worse. Rising inflation will push the Federal Reserve to raise rates even more as the Fed raises rates, and it incentivizes businesses to keep their money idle to earn interest instead of investing it. This will lead to even less production and more inflation. Demand keeps increasing but supply does not. So the Federal Reserve can raise rates all it wants, but it won't have the intended effect. And it will just move even more capital from the legacy financial system to Bitcoin because of the supply certainty. It has a predetermined supply schedule and debasement resistance, and it can't be printed at will. So if the Fed chooses to decrease rates from here, it will lead to even more interest in Bitcoin as market participants try to find a way out of holding dollars, and you can buy any amount of Bitcoin without having to take on debt. So this is unlike real estate, which is negatively impacted by interest rates since prices are so high that everyone needs to borrow to buy a house. And if rates increase demand for real estate as an investment drops, it becomes less profitable and Bitcoin's price rises even further. So the current financial system relies on the market participants to borrow money and pay interest so it can continue operating. And if Bitcoin holders want real estate, they can exchange their asset directly for a home, allowing them to completely avoid the banking system if interest rates are too high. And if interest rates are increased from where they are today, to reduce demand and control inflation, it puts the US government's bonds at risk, as the US government will need to borrow more money to pay the interest on its debts. So if interest rates stay stagnant or are reduced, it puts the US dollar at a risk, and the spiral will continue until Bitcoin is the dominant form of savings for the majority of people, countries, businesses. And I think this will take 10-20 years to play out, but who knows, it could happen a lot quicker. Any thoughts on this one? In a week or two, you wake up and Bitcoin is over 80,000 and you never bought any, you only have yourself to blame. The same will be true at 100, 150, 250,000, 500 and even 1 million. Everyone gets the price they deserve. I love this price action on Bitcoin. Daily RSI resetting nicely. I want us stable until the halving, and God almighty afterward, get the guns out. We're gonna go parabolic. Bitcoin bears have been hiding in their closets the last few weeks. It's glad to see them back out today shouting the top is in. Watching them to be proven wrong is almost as fun as making millions of dollars. Let's see if the bear market until 2025 ETFs won't be approved. No autumn high till after halving. Idiots gets this one right. They won't. You were here through the bear market and it didn't reach your whole coin goal. That's on you. Uber cheap Bitcoin the last few years even hit 15,000, so much time to settle up for your whole family. Just don't let the price or arbitrary round numbers dissuade you. Everything sub 10 million is dirt cheap. Keep stacking radical self-ownership and max effort will get this number up. We're gonna make it. Saylor has turned hyper-financialized institutional credits markets and public equity markets into a Bitcoin printer. Issue low-interest unsecured convertible notes, buy Bitcoin, increase Bitcoin per share, repeat until the $5 million in Bitcoin. On the live stream today, I covered the next possible Bitcoin buy, the deep scenario based on lower 4-hour chart timeframe, bearish divergence, rising wedge, sell signal, higher timeframes like the monthly, weekly charts remain bullish and ultra bullish. Bitcoin top has not yet come. According to historical behavior of RSI M2, Bitcoin is used to top out above the top signal line. For now, RSI is still under the line with a distance, and it means that Bitcoin still has the room to climb higher and financially will reach the blue dot on the chart. Just in, Cetera Financial Group, a $475 billion wealth manager, will offer for spot Bitcoin ETFs to clients, offering to include BlackRock, Invesco Galaxy, Franklin, and Fidelity Wise Origins. Bitcoin open interest wiped 900 million USD off the table, 140,000 traders liquidated. Coinbase and Binance chose violence. Today nothing changed. We are the support zone, and BlackRock and Fidelity probably buying hard right now. Also, higher lows and higher highs are all I observe here. Shorts keep growing and it will act as rocket fuel for new highs. Tick tock. Bitcoin mining challenge hits record high prior to halving event, so the Bitcoin network experienced a significant increase in mining difficulty, reaching 84 trillion hashes on March 14th. As this milestone aligns with the Bitcoin price peak spiking to an unprecedented level of $74,000, as the measure of mining difficulty reflects the complexity of the cryptographic challenges miners must solve and various bias of the network's mining activity. This is why Bitcoin might see a correction before the halving. So Bitcoin has once again captured the spotlight, registering a staggering 72% price increase year to date, opening the year from $42,000 and reaching the $73,000 as of now. So where we are seeing the correction, based on the MVRV pricing band indicator, price correction could push Bitcoin to test the 2.4 MVRV level, currently near 61,700. The MVRV pricing bands are graphical representations that plot the MVRV ratio over time, delineating different market sentiment levels as they can gauge how the current price compares to historical realization prices and signal potential market reversals or continuations. So that's kind of all the information we got on today's video, and if you're interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.